Hello, welcome to Todd Miller TV. So just found out today that we are at the lowest level of home ownership in 18 years. Now, I will put this in perspective. That's a percentage. So the actual number of homeowners is even less because as a percentage, we have a lot more houses. So what that means is that more houses are owned by investors today probably than ever, like more numbers of houses.
Right.
Okay, so where does that put us with having, being basically at the same point we were 18 years ago?
Well, it means that a lot of things are probably going to change. Change in ways that maybe people haven't considered.
Okay.
With the number of homeownership declining, we might even see tax changes. We might even see changes. The home interest deduction may be going away.
Okay.
So that may be a realistic thing that may be happening, which will change the way people look at homes.
Do you think that would make things even worse? Because the government has always done things to incentivize people to go out and buy a house.
Right.
So you think by taking that away, they even make it more of a disincentive and make it more likely for people just to become renters?
I think that is a significant possibility. The market has changed a lot. I mean, we have these hedge funds that have now gone out of their comfort zone and purchased hundreds of thousands of homes in dozens of markets across the country.
Okay.
So they are a major block. There are all kinds of changes. So change is good. Okay, that's what I want to kind of emphasize.
Okay.
Change is good. Change is good because it promotes new opportunities where there weren't before.
The average investor owns 5 properties. Those are the numbers. So that's average. Some own more, some own less. Where do you see then, because like right now the market's been appreciating, like last year 24%. So that means in Las Vegas, that means investors in Las Vegas, if you think about it, if you own 5 properties in Vegas and they were $100,000 properties, they're all worth $124,000 because they went up 24%. So in a year, you made $125,000 of equity in a year because 5 properties appreciated by roughly $25,000.
Right.
That some homeowner didn't get that appreciation that later when they sell or if they want to use that cash for something, they can do that.
Which again, that goes back to the same thing I said. That's a new opportunity. That means that these investors were not going to get, we're not interested in that home interest deduction anyway because they get
Right.
to deduct everything anyway because it's an investment. So that's a whole separate ballgame right there.
Okay.
So now these investors are still getting all these benefits. And the really cool thing for them is they're making double-digit returns in a market where, if you put your money in a treasury bill or in the bank, you're losing money every day.
Right.
Because inflation is going up at a higher pace than what you're going to be earning in the bank or on the treasury bill. So they're making money in this market, and that's what I mean about opportunity and change being good.
Okay, so how does a person who, interest rates have gone up too.
Right.
Like almost 1%.
Right.
That number in 2012 and 11, where it was at like 3% for a 15-year, I believe that's gone forever. I mean, I don't know that we're ever going to see a 3% 15-year fixed
Right.
and like a 3.75 or whatever
Right.
30-year fixed.
Okay, so you're not going to see that, but what that's going to do is it's going to bring back to the marketplace the ARMs, the interest rate loans where they're at a low rate for 1 to 3 to 5 years, and then they adjust. Okay, those adjustable rate mortgages are coming back. Also, historically, you have to remember that just because interest rates are going up, that really has very little impact on the price of homes, on their appreciation. So that's a whole independent story right there.
Okay. So in closing, what do you see in the next year or two? Because we know that over the last 5 years, investors in Las Vegas have bought 50% of the houses, or a little more than 50%,
Right.
and they paid cash for them.
Yes.
So they're never going to get foreclosed.
Right.
They're probably never going to sell because what they paid for the house and for the rent they're getting, they'll never get that kind of return on any other.
Well, I would kind of say not so fast.
Okay.
Because remember, a lot of the investors who purchased, particularly in the last 2 years, in Las Vegas in particular, are the hedge funds.
Okay.
And hedge funds are not known for sitting
Right.
on their investments. They are
Yep.
known for liking to work with their money. So I think that they will be flipping their properties.
Okay.
Okay, when they're going to flip, that I can't answer, but they will be flipping their properties probably faster than an individual investor, because hedge funds make money for the fund in a couple different ways, and then for the fund managers, one of the ways that they make money is by working with the money. If the money's just sitting there and it's not being
Right.
worked with, then they're not making money. So that's a whole different area that's different than what we've had to deal with in the marketplace before.
Do you think there's opportunity in the next year in this market for investors to still get a decent return, monthly cash flow plus a long-term return?
Absolutely, yes. Look, in every market there's opportunity. It's just a
Okay.
matter of finding it. And if it was super easy, everybody would be doing
Right,
it.
okay.
So it does mean that our investors need to do a little bit more homework, need to be a little bit more savvy, and it's not just, oh, find me any property and let's buy it.
Okay. Cool. All right, so I just want to share that with you, the number that we're at 8, we're where we were 18 years ago for home ownership, and given the fact that the number of houses has grown, what that means is that there are far more people who are investors who own houses than have ever. There are probably today more investors owned houses than there ever been ever, and that's partly because we have more houses than we've ever had.
And because we have institutional investors playing at the single home family level.
Right. Plus, I think a lot of people, when prices tanked, took money out of other equities and said,
Yes.
I'm buying real estate.
Absolutely.
And they moved into that in a big way.
Absolutely. And we saw that in Vegas back in 2004, 2005. People would
Right.
come to Vegas for the weekend and leave having bought a house.
Yep, I agree. All right, so that's my update for today, and hope to see you on another video. Thanks.